First of all, is cash poor asset rich a good thing or a bad thing? What does it mean if a person is cash poor but asset rich? The important part which you might want to ask is, can you build your wealth based on this concept of cash poor asset rich? Let's first tackle this term cash poor asset rich. Well, I've searched on the internet on explanations of this term, and let me tell you, it's generally bad. I like this explanation by Experian.com. It says, what does cash poor mean? And the quick answer is, to be cash poor is to have wealth in assets but not enough liquid money available for spending and saving. Wow, it goes on to say being cash poor makes it difficult for you to afford your expenses or limit your ability to make discretionary purchases. An example of a cash poor asset rich person can be you're a person who have fully paid your property, which could be worth hundreds of thousands or even $1 million, but yet you have little savings and cash left over, or you could have zero to little contingency funds, or you could be living paycheck to paycheck, which means at the end of the month you have little cash left over. This article goes on to share many details and great examples on people who are cash poor asset rich. I'll put it in the link below so you can read further. Now, one thing for sure, one of the key challenges that cash poor asset rich people face is this word called liquidity. In today's video, I'd like to share with you a different spin to being cash poor asset rich, a revelation if you will, such that it can help you build your wealth for the long term. Before I continue, just a quick sharing about this channel. I'm John, one half of the Corporate Breakout Couple. My wife Fran and I are multi-asset class investors, and we have successfully invested our way towards financial freedom and early retired at the age of 40 in 2020. On this channel, we create a lot of content around personal finance, investing, building wealth, about early retirement and our travels around the world, as well as breaking out the rat race. So we appreciate it if you hit the like button and subscribe to join our channel so that we can create more content for you. Let's go! Who comes to mind when you think about somebody who's cash poor asset rich? Traditional retirees who are probably in their 60s or 70s, right? A number of traditional retirees who have worked all their lives probably have fully paid properties from their 60s onwards, but at the same time, a number of them only have a meager budget every month because of the little payout that they have from the pension or from the government, or their savings is not enough and limited because they also need to set aside for their medical. So therefore, they are on a very strict and tight budget for the rest of their lives. I would like to highlight to you a very real and strong fear among the retirees, and that is the fear of running out of money. Think about it this way. If you are a traditional retiree who retired in your 60s, and as you get older and older, chances are you're going to get more and more disconnected with what's happening in the world, such as inflation that will hit you constantly. So what happens? The same $10 that you have right now is not going to be worth the same $10 10 years from now. What can you do? Go back to work with depleting energy and a slowing mental capacity, or rely on more government handouts? The truth is, even if finally you had enough savings for you to cross the finishing line of life, but let me ask you, during the whole time, what of your mental state as an old and aging retiree in terms of money? Mentally, if you have this fear of running out of money, will that not constantly cause you to keep worrying about money? Does that not then affect your quality of life in terms of satisfaction level and happiness? And that is in your golden years, mind you, when you are supposed to be enjoying your life. Let me be objective here. For traditional retirees in their 60s and over with fully paid properties, can they sell their property and downgrade and get a bigger pool of savings? They can. Can they attempt to be more and more frugal and cut down on their budget as inflation hits? They can as well. But remember, these are the generations of our parents and grandparents who've gone through wartime and can live with it. My question to those who are 50s and younger, can you do the same? So far, what I've shared about being cash poor, asset rich has not been a good thing, right? Especially with the examples of the traditional retirees. Now, I'd like you to drop all that, discard all that, and now open up your mind to new possibilities of being in this state, cash poor, asset rich, such that it can be one of your building blocks for you to build your wealth. The key part and secret to harnessing the power of being cash poor, asset rich is this. You have your assets, you have your cash, and in the middle, what you want to do is to balance your liquidity. The balance of your liquidity will determine whether you have enough money for your expenses on a daily, monthly, or even yearly basis, and at the same time have enough contingency for you to tide through periods of perhaps unemployment or severe medical needs. The liquidity of your assets generally means how fast can you exit your position and take the money out to be transferred into your bank account. For example, properties which are an illiquid asset may take you at least 3 to 4 months for you to sell the property and have the money transferred into your bank account. Another example is paper assets such as stocks and index funds, which may take you 3 to 4 days or even a week for you to exit your position and finally have the money transferred to your brokerage account to then transfer to your own bank account. Now, an important thing to note, when I'm talking about liquidity of an asset, it doesn't take into account the current market price of that asset. Okay, it means that you need to exit in a hurry, you need that money, so you are selling at whatever price the market offers at that point in time. So, how do you balance the liquidity of your various assets? How successful you will be at balancing the liquidity of your assets and your investments is down to 3 things. The first is your skill level. The second is your experience, and the third is your continuous learning. Your skill level will determine how good you are at making money off your assets. Your experience is what will teach you about risk management after being constantly humbled by the markets. And your continuous learning is what will give you confidence to keep going and invest further. Before I help you connect the dots to balancing your liquidity of your assets and the state of being cash poor, asset rich and how they are related to building wealth, I'd like to introduce to you another term first, and this term is called cash flow. Specifically, I would like to talk about cash flowing assets. Examples such as properties, which gives you rental income in a passive mode, or stocks with dividends or index funds. Let me share with you the wealth cycle, the secret of the rich. At the starting point where people only have jobs or maybe a business where you have earned income, you flow some of the earned income into savings and investments, and the money that are invested goes into cash flowing assets such as real estate or index funds, and that cash flowing assets gives you a monthly cash flow in the form of dividend, in the form of rental income. Now, what do you do with the money? That money, you flow it back into the asset. Your earned income, as you get paid more and more, you flow even more money into that, such that this asset is growing and growing, and that means you have more cash flow every month, such that to the point where maybe you initially start with $500, it becomes $2,000, it becomes $5,000. Now, if this matches your current expenses, congratulations, you are financially free. How good you are in building your wealth is down to the 3 things that I mentioned earlier: your skill, your experience, and your continuous learning. Now, let me connect the dots back for you. By being cash poor, asset rich in this instance, your focus is actually on building your list of assets, especially those that are cash flowing, such that you can increase your passive income cash flow, which you can then put more money back to continue growing your list of assets. And how you balance your investment portfolio, how you diversify into different asset classes will help you manage your liquidity, because you want to keep yourself yourself cash poor because you want to put more money into your assets, but at the same time, you don't leave it such that you have no runway, you have no contingency for you to tide through medical emergencies. So the balance of your portfolio, knowing which are more liquid, which are less liquid, will then get you there in terms of managing the entire financial situation for your future. The benefit of being cash poor asset rich is such that you are actually spending less money on frivolous and unnecessary things, which are liabilities, which takes money away from you. You want to put your money and keep yourself cash poor into growing assets that ultimately will help you build your wealth in the long run. I hope this video has opened up your eyes and given you a different spin to being cash poor asset rich and hopefully help you on your wealth building journey. Come join us on our free masterclasses, which we conduct a few times a month, where we actually deep dive into such topics on finances, on breaking out the rat race, on early retirement, and discussing all the different mindsets that financially independent and early retirees like us adopt, such that we can then ultimately help you along. Click on the link below to join our mailing list so that we can send you the upcoming Zoom webinar details. Otherwise, thank you so much for watching. I'm John, one half of the Corporate Breakout Couple. As usual, do hit the like button and subscribe to join our YouTube channel so that we can create more videos like this for you. Bye bye!